The Nigerian government spent an estimated 4.22 trillion around debt servicing in 2021 alone, which is a 29.3% increase from last year's amount, while revenue grew slightly at 9.3%. And it still leaves much room for improvement, as there are many other aspects that need attention, such as economic growth or poverty alleviation initiatives, among other things. But despite the increase in the value-added tax rate from 5% to 7.5%, debt service obligation continues to trend upward, giving continuous borrowings by the federal government to fund its budget deficit. So what is the impact of this on Nigeria's economy? So that's our next talking point now. Olaolu Boboye is a research analyst and development economist. He joins us now. Thank you for your time. We appreciate you.
Thank you for having me, and good morning to you.
Yeah, good morning. What do you make up of this latest figure? Government is spending almost all what it has made or generated and servicing debt alone. First, let me start by asking you what your opinion is, and of course the implication of these on the country's treasury.
Okay, once again, thank you for having me. This has been one of the major concerns, in terms of Nigeria's elevated debt servicing. I know it's a ripple effect of, number one, elevated borrowings.
Hello, Mr. Boboye. Okay, I guess, okay. Hello, Mr. Boboye.
Yes, I can hear you. Can you hear me?
Yes, all right. Please continue.
Okay, so I said the elevated debt servicing that we're experiencing at the moment is a ripple effect of elevated borrowings and as well as low revenue mobilization in the country. Now, to put a bit of picture to this, when government generates oil revenue, let's use oil revenue as an example. When government generates oil revenues, right, typically in a period where crude oil price is relatively elevated, you would expect that oil revenues will also go higher, which could reduce, the level of borrowings and as well as the level of deficit. But the picture is a bit different from Nigeria. Take, for instance, in 2020, we discovered that the gross revenue from oil that the government generated, about 32.4% of that was spent on subsidies, right? And the reason for this is because Nigeria is subsidizing. So, number one, there is a revenue problem. Number two, there is also an expenditure problem, which continues to worsen the debt servicing situation of the country, right? In terms of the implication for that,
before you go to implication, just a follow-up question there. When you say revenue problem, is it that we're unable to generate, or we generate, and then you talk about spending? So when you say expenditure issue, so what exactly are you talking about? Is it the way we spend, or we're not spending the right way? Please, you need to break it down.
Yes, I will break this down. Let me pick oil revenues, for instance. In 2021, the gross oil revenues that the government generated was spent on 5 major things. Number one is the JV cash costs. I won't go into that. Pipeline repairs, PMS subsidies, government priority projects, and then the net balance is transferred to the budgets now, which is being spent. Now, what we discovered is that between 2020, when crude oil prices were relatively down, right, Nigeria spent about less than 5% of the gross oil revenues on subsidies, but we spent about 32.4% in 2021. So, which means that subsidy payment, which is adjusted for revenues, continues to take a toll on government revenues. Right, that's number one. It's like an expenditure. Secondly, when you look at the expenditure composition of the Nigerian government, you see that a significant portion of that is tilted towards recurrent expenditure, which limits spending for capital expenditure that can generate future returns for the government. That's painting the picture, of expenditure problem, and also on revenue challenges. I've spoken about subsidies limiting our revenue. Other sources of revenues, revenues from
Hello, Mr. Boboye. Well, we're looking at the impact of the borrowing, assessing Nigeria's debt situation and how country is spending about 96% of its revenue on debt servicing in 2021, according to a report. Yeah, Mr. Boboye, please, if you're there, yes, I'm aware you're back.
Yes.
Please continue.
Okay. So, that tells us that we have both revenue challenges and expenditure challenges, right? And so in terms of, the impact of, this elevated debt servicing on the overall economy, the impact is it typically limits the fiscal space, that Nigeria has, right? When you look at the fact that spending more than 90% on debt servicing, you have less than 10% to do other available things. So which means that we continue to move around the vicious circle of higher borrowing costs, lower capital expenditure, and as well as spending more on debt servicing. So this is, has kind of created a recurring problem, which unless revenue leg is fixed, and expenditure is properly managed for essential things, right, will likely continue this cycle.
I mean, some people may not, toe in your position, in the line of your thought that, we have revenue challenges. I mean, they believe that the government is making money. I mean, recent reports shows that in the last 2 to 5 years, the NNPC has generated about, or made money about almost 20 trillion from, oil revenue alone. So it means that we probably do not have revenue challenges like you posited. But some people believe that it's an issue of management. What's your position on that? That's number one. Then number two, we also need to look at the fact that if we have this much to spend, why do we need to borrow?
Mm-hmm. Okay, so on the first question, right, that we don't have revenue problems. Yeah, I agree with the fact that the NNPC is making quite a lot. Given the fact that crude oil prices are relatively elevated, and in fact we could even have made more, and we could make more. But then we have crude oil production challenges. Especially given the elevated oil theft and terminal shutdowns that we have. But then when you look at the fact that Nigeria continues to subsidize, PMS taking more than 30% of NNPC's revenue, right? It reduces the benefits that we can gain from the elevated inflows from NNPC, right? If subsidies were not there, for instance, right, Nigeria will have Nigeria has budgeted about 4 trillion for subsidies this year. So imagine subsidies were not there, right? Nigeria will have about 4 trillion naira in space, in fiscal space that could be used for other things. Yeah. So people that giving that view, yeah, it's quite valid, right? But when you now begin to net off those subsidies and other things, then it begins to tell us the picture that management is there. Maybe revenue problem too is also there. And a bit on non-oil revenues. When you look at tax buoyancy in Nigeria, we compares tax growth, that is what government is able to generate, and you compare it to the economic growth. When you compare Nigeria to Ghana, Nigeria is worse off, right? Because tax compliance in Nigeria, double taxation in Nigeria, has limits, upside that can be gotten from non-oil revenue, especially the tax revenues. So there's a bit of, oil revenue concerns, and there is more in terms of management concerns. And on the second question, please can you repeat the second question?
Now the second question is that it's not the issue of management, and that's because we spend so much. But the question is, if we have so much to spend and we're making this that amount of money, just over 20 trillion, that's for the NNPC alone, not to talk about other government agencies. So why then do we have to borrow if we have this much money?
Yes, so fine, we have that much money also. But when you when you check government fiscal budget, over the last 10 years, even more than that, Nigeria has been running on a fiscal deficit, right? And that's because our expenditure, just typically outpaces our revenues, right? So fine, we make a lot. We also spend a lot. We spend a lot on debt servicing, like you rightly said. We spend a lot on non-debt recurrent expenditures. And we spend a very little, less than 30 to 40% on capital expenditure. So if perhaps Nigeria was spending, for instance, somewhere around 30%, 70% of the gross expenditure on capital, projects, or capital activities that could generate future inflows, right? It will be beneficiary much more for Nigeria on the long term, but we do more of recurrent expenditures at the moment.
Okay, so how do we switch from spending more on the, recurrent expenditure to focusing on capital expenditure, and that's one, of course. And then what is the implication of this for ordinary man? Because some school of thought believe that if to pay this debt ahead, it means that the next generation will have to suffer and prepare to cough out over 3,000 naira from their individual pocket.
Yes, so in terms of this whole repayment, we've been here before. In 2003, 2004, thereabouts, when Nigeria got the debt relief from Paris Club, Nigeria had a lot of external debt pressures until the relief came around, right? And it's sorrowful that we've gone back to those levels again, right? Speaking to what Nigeria can do to move from recurrent to capital expenditure, I'm always in favor of a medium to long-term structure, something that is solid and something that can be built consistently over the next few years. Number one, let's fix our revenue challenges first, right? Let's improve collection. Let's cut off on non-essential expenditures, right? Non-essential expenditures. Let's cut off projects that are not generating future cash flows, which could help the government, to meet its future obligations. If we're able to cut off non-essential expenditures and improve revenue mobilization in the country, looking at other sources aside from oil, improving and deepening the non-oil sector, right? Revenue will improve. Once revenue improves, we'll have enough legroom, to spend more on capital expenditure. And if this trend, if you imagine you having revenue growing at about 40 to 50% annually, over the next 10 years, Nigeria will have enough to meet its debts, to partly clear its debt, and also have enough for capital expenditure. So it's a long-term work. It's not something that can be done suddenly. It's long-term, and it has to be progressive. But there is need for a well laid out plan by the government.
Workers, it's a pre-election year. The government is preparing to, perhaps may focus more on election matters ahead of the 2023 presidential election. Do we expect to see government borrowing more? Yes, they've said there's possibility of going that way again. And then, how much do you see the government borrowing more?
So, when we checked the numbers and then we did our own forecast for 2020, right, we discovered that government's deficit, as a fiscal deficit, could touch about 10.5 trillion naira. That's about 5.5% of GDP, in 2020, 5.5% of GDP. That gives us a picture of the magnitude of deficits, right? The government has gone into the international market to borrow at an elevated cost because of global tightening conditions, from the domestic market. Our prognosis is...
Hello, Mr. Boboye. Well, I don't know if you can hear me. Let's just try to wrap it up now. Hello, can you hear me?
Yes, I can. Can you?
Okay, yes, I can hear you now. Well, just try and see how we can wrap it up.
Okay, great. So I said we're likely to see increased borrowings from the government, right? Because our projected deficit for this year is above 10 trillion naira.
Okay, and is that healthy?
No, it isn't. It isn't. It's increased debt costs, for governments in the future.
It's all right. I think we'll just have to leave it there. Thank you so much, Mr. Olaolu Boboye. He's a research analyst and development economist. Thank you for coming on the program. We'll appreciate your time.